Before I welcome Jim up, I just wanted to sort of tell you our introduction story. So New Hampshire Housing is an agency in New Hampshire that offers a ton of different housing programs. I believe they administer the Section 8 housing program. I think it's Housing Choice Voucher now, is that right? Yeah. And they also do a bunch of other programs as well. I'll tell you personally, I've worked with New Hampshire Housing. When I bought my first triplex in 2019, this is sort of an interesting story, but I bought it with an FHA loan, so I only had to put 3.5% down. But then New Hampshire Housing offers a first-time home buyer down payment assistance program, where they will provide you with 3% of the purchase price in down payment assistance that is administered as a second lien on the property, and it's forgiven, I think, after 4 or 5 years or something like that. So I was able to buy this triplex and only have to bring 0.5% down. So that plus closing costs allowed me to buy this triplex with $10,000, which was awesome. And it was all the money I had. So it was perfect that I only had to bring 10,000 because then I had zero. But it was great to partner with New Hampshire Housing. And I don't know about you guys, but I've seen that New Hampshire Housing has some other programs available, which is why I reached out to them and I got connected with Jim. It seems like they have some development funding available. In particular, I was driving down, I believe it was Union Street, and I saw a sign that said, this property is being developed with New Hampshire Housing. I thought that was interesting, so I reached out to the organization, got in touch with Jim, and he's going to talk about some of the ways that real estate investors can partner with New Hampshire Housing and some of the opportunities that they have available. Additionally, I've got some information on New Hampshire Housing. I'm going to put it on the handrail over here. So if you'd like some information on New Hampshire Housing, that'll be on this handrail over here. So Jim, come on up.
Thank you, Brian. Brian, can you sit down?
I don't. Yeah. Here, let me.
Last time I held one of these was at a karaoke bar.
Hello.
After a couple of shots. Well, thank you all for having me here. I think I get the gist of the audience here and what you'd like to hear. I'm in the multifamily division of New Hampshire Housing. I deal with a lot of developers that want to develop affordable housing throughout the state. The program that we offer that is the catalyst for it really makes everything happen is what's called a low-income housing tax credit program. And it's a program that's run by the Internal Revenue Service. We administer it on behalf of the state of New Hampshire. Again, it's an IRS program. I'm not going to get into the weeds here tonight because it's extremely complicated, but I'm going to tell you a little bit about how it works. Because I think all of you are interested in developing and making money in real estate, and it's a good program in doing that, but it has a lot of restrictions. That's probably one of the cons of the project when you come to an agency like ours. There's a lot of oversight. You're signing land use restriction agreements, covenanting to keep the units that you develop affordable for a certain time period. And that time period in New Hampshire under this tax credit program that we offer is for a 60-year period. So again, you'd have to keep rents affordable to the property for 60 years. But let me go into a little bit about how the program works. The tax credit is, what you'd have to do is you'd have to form a partnership. You, as the developers of the real estate, would be the general partner in the transaction. What you do is you partner up with a limited partner. And those limited partners are usually banks, large corporations, somebody that has the tax liability that can use the tax credits that are generated from the property you're going to develop. They take those tax credits on their federal tax return for a 10-year period. They stay in the deal for an additional 5 years beyond that. So they're your limited partner in the deal for a 15-year period. There's a federal extended use requirement beyond that 15 years, which runs for another 15 years.
Wow.
So that's 30 years now of affordability, but every state within the union can extend additional affordability requirements on that. And New Hampshire, we require an additional 30 years beyond that. So what I said earlier, these properties that you develop, they have to remain affordable to households at certain income levels for a 60-year period. So that turns a lot of developers off from entering into the program, but I'm going to get into, I think what everybody wants to hear, well, how do you make money doing this type of development? So why don't I give an example now? Most of the projects that come in under our tax credit program, it's a very competitive program. We have one funding round a year. We generally get about a dozen or so applications in from developers that want to build these affordable housing projects. They range in size from, generally the sweet spots is about a 40-unit development under what's called the 9% tax credit, which is our competitive program. And I'll just talk, I guess, about how that could be structured. So let's say a 40-unit development, it's going to cost you approximately, say, about $250,000 a unit, so it's $10 million total development cost. That's approximately what we've been seeing for some of these deals. That $10 million total development cost, that includes your hard construction costs. There's also a lot of soft costs involved in these developments. There's a lot of attorneys involved too. Attorneys, but it can be expensive. Accountants, engineers. So the soft costs are excessive in these, but we also allow a developer fee, which that would be your incentive as a developer to build this 40-unit project at $250,000 a unit. We're talking a $10 million project. The developer fee, we have a sliding scale to calculate that developer fee on, but it's generally anywhere from 5 to 10% of the total development cost. So you as a developer, for your time and benefit, time and for putting the deal together, you'd be able to build into the total development cost a developer fee of anywhere from $500,000 to $1 million for doing that type of project. But there's a lot of risk in doing that. There's a lot of upfront costs in putting a project like this together. You have to go and get the approvals, and I caution all the developers that I work with that that's probably the most challenging part in New Hampshire, is going to the local level, trying to get your approvals and entitlements to build that 40-unit development. You're extending a lot of engineering fees, lawyers' fees, architect for doing schematics. So there's a lot of upfront costs that you're going to be expending before you come into our agency to apply for the financing. That's extremely risky. However, the beauty of the program is this limited partnership that you're forming is your limited partner is coming in with an incredible amount of cash equity to basically to receive the benefit of that tax credit that they're going to be receiving over a 10-year period. And I mentioned the 9% credit. That's also referred to as the 70% present value credit, because this $10 million project that you're going to be developing, your limited partner is going to come in up front with equity in the deal of approximately $7 million or thereabouts. That's not enough to get your project built. There's still a $3 million gap in your project that you have to finance somehow. We also offer New Hampshire Housing debt, permanent debt products. So you'd apply to us for the permanent debt. You have to keep rents affordable, again, for that long extended time period I'm telling you about, but nonetheless, it still can generate net operating income where you can service a certain amount of debt. So that $10 million project describing, you get your $7 million in equity, say the net operating income at that restricted rent based on the terms we can offer for permanent financing, you can carry another $1.5 million in debt. So now you're up to $8.5 million. Now, where do we get the other $1.5 million to close the gap in the financing to get this project built? Well, that's where New Hampshire Housing also comes into the picture. We offer these, we refer to them as deferred payment loans. We structure those as 0% interest, and it's just repaid with a certain percentage of cash flow, usually 50% of cash flow. If it's available to the project, you'd be repaying us over the course of that loan that we structured for to repay that $1.5 million in capital subsidy debt that we're loaning to the project. So that's in a nutshell how you could get a project like this financed with our agency. Again, the key to the financing under the tax credit program is the tax credit. It generates a lot of equity that comes into the project to get these deals done. You as developers, there's the incentives again are the developer fee that you could earn in putting the project together as the general partner and the sponsor. There's also the benefit of these are restricted projects. They don't throw off a lot of cash flow because of the way we underwrite them, but nonetheless they throw off cash flow. You as the general partner in the transaction, which you have a very small interest in it, it's generally less than 1%. You as the general partner, and your limited partner has the 99% plus interest in it. But that doesn't mean how the cash flow is split. You enter into a partnership agreement up front with your limited partner, and you negotiate as far as the cash flow split. And the limited partners, they're in it for the benefit of these tax credits. They really don't care about the cash flow that much, but nonetheless, they will take some of that. And generally, what we've been seeing is they take about 10%, 10, maybe 20%, but that's all up to you as the general partner to negotiate with them. So there is cash flow as a benefit also to owning this type of a real estate product. And there's again the benefit of the developer fee that you receive. But again, it's a very complicated type of process. I'm just trying to simplify it, because you can see all the people that want to be developers probably in the room and develop this type of real estate. But generally, the developers I work with have been this season. They understand the affordable housing and how it works. It is complicated. There's a lot of rules and restrictions, but it is a key program in New Hampshire and throughout the country in getting housing built. Not just affordable housing. On some of the projects that we finance, they're mixed income developments. Again, it's a very complicated type of program, but it gets projects built in New Hampshire and throughout. I'm going to open it up for questions.
Awesome. So go ahead and open it up for questions. I think I've got a few just to begin with. So I'd love to just repeat back what you said and tell me if I'm missing anything. So New Hampshire Housing offers a tax credit program where I could form a partnership. I would be the general partner. I would find some business that has a tax burden that would be the limited partner. They would get to take advantage of this tax credit. They would bring equity to fund the deal. These are usually, you said 40 units? They could be bigger though?
Yeah, they range anywhere from a low of 30, 40 units up to over 200 units, the projects that we finance in general.
Okay.
But when you say you have to find a limited partner, there's what's called syndicators out there. They put these partnerships together. they'll get the banks and the insurance companies and high net worth individuals to put money in their funds. And as soon as you as the developer are awarded a credit reservation from us, these syndicators will find you. They go out. It's not like you have to go out and knock on doors. And there's so much interest in this type of real estate investment, and these syndicators, again, they'll find you. They want to invest in these partnerships because that's how they generate their fees too.
Okay, makes sense. So, and then as far as the remaining equity that has to be funded, let's say the limited partnership, the business, or the high net worth individuals, or the syndicators bring 80%, then the remaining 20% would be my responsibility, but there are some other programs available through New Hampshire Housing that can help out to offset that cost?
Yeah, again, another benefit of the program, this, that $10 million development that I referred to, that, you're advancing a lot of money up front, but if you are successful in receiving the tax credit and getting an award of tax credit from us, that all comes back. Basically, it's 100% financeable, these projects. You as a general partner, again, you're advancing money up front with no guarantee you're going to get a tax credit, but when you do, and you put the project together, you get your limited partner. Your limited partner is the one that's really coming in with the equity and the down payment and money. So it's essentially for a general partner and a sponsor, like a developer, that it's a no money down type of transaction. But risky up front because you're advancing a lot of money to get your approvals and entitlements from the local community. But at the back end of the closing table, you're reimbursed for all that money you expended up front. You're also getting that developer fee, albeit it usually comes in chunks. You get some up front from your limited partner, and then certain amounts at 50% completion perhaps, and then at the end of the project, you'll get a certain amount, and then after it's stabilized, you'll usually get the balance. So.
Okay, all right. So I guess I'm just trying to visualize the process in my head, and so if I wanted to work with this program, I would identify a property where I want to build some type of affordable housing. Mm-hmm. I would secure the approvals from the town to build that type of housing there. Then I would submit an application with New Hampshire Housing to get the credit, and then once it's granted, that's when sort of it begins, and then the syndicators will find me and we'll get the funding, and then we can, actually execute on the project.
That's correct.
Okay.
The tax credit, it's governed by each state has to come up with what's called a qualified allocation plan. And embedded within that plan is scoring criteria, how you can compete and be awarded these credits from us. We have certain categories. Our biggest category, though, is advanced projects. So we generally, when the developers come in, they already have their approvals from the town. I mean, because that's one of our highest point scoring categories. So yeah, there's a lot of risk involved in doing this, but again, the beauty of you as developers, if you wanted to do this, it could be 100% financeable at the back end, and you're also making a fairly good developer fee, anywhere from 5 to 10% of that total development cost, which is a lot of money. I've talked with a lot of developers over the years, and a lot of them have become very successful in the project and in the program.
Now, Gal, you were selling